We have Harshil Mathur, who is the co-founder and CEO of Razorpay. Welcome to the NextBigWhat show. And we have quite a few questions around Razorpay's early journey to what the company is really up to. So, welcome, Harshil. Would love to know why Razorpay. I mean, why did you guys start?
So the journey started in 2014. Me and Shashank graduated from IIT in 2013, and he worked in Microsoft in US. I was working in Schlumberger in Middle East. And while we were doing our jobs, we were pretty bored out of it. We had a lot of free time, so we were doing a lot of side projects. For one of those side projects, we had to accept online payments. So we talked to almost all large players, and we figured out that nobody really catered to startups in this segment because most of the online payments at that point, is early 2014, was dominated by large enterprises, and most of the processes were built for large enterprises. So we were asked for a bunch of paperwork, proper office setup. They wanted to see our office, and when we were not even in the same city. And we thought most startups start like us. Like nobody has an office on day one, nobody has an operational records on day one. You can't expect a startup to have everything ready and well said. And more importantly, the onboarding time was at least a month, which is too long for a startup. In the end, when we got onboarded, the technology stack that was made available was very subpar. There were no REST APIs. There was half of the things were done over emails and Excel files, and we thought that this is not the future. And we definitely thought that if somebody builds something in this direction, especially this is early 2014 when a lot of startups are coming in, then they can get a lot of early traction with these startups and can grow with them. So that was the original idea. Of course, we had to spend a lot of time researching regulations and all of that to figure out whether this can be done or how can it be done. But that's where the original idea came about.
And I'm guessing that in the early days, even partnering with a bank would have been a tough task because nobody cared about startups, those days, like the way they do now. But
Yeah. No, parting with the bank was definitely the toughest task we had to go through. I mean, we built the product pretty quickly, and both of us had good tech background, so we could do that. But the one thing where we didn't have any experience was partnering with banks. We didn't know what to talk to banks or how to convince them or what are the things they look for. So I remember the first day when we decided to do this, I just went to a neighborhood branch in Jaipur of one of the large private sector banks, and I talked to them. I realized that they don't even know what a payment gateway is. Yeah. So I had to spend a lot of time talking to various bankers to try to find the right guys who can help us get into that. And that was the toughest task. We spent at least 3 to 6 months just getting the right banker, because I had to personally go and meet about 100 bankers. Almost everyone said no initially because we were from non-financial background, and they thought like payment gateway or payment companies are generally built by people from banking background, and they said like you are too techies, you don't know what your guys are doing, and our requirements are also not very simple. We just didn't want a pure payment gateway experience that everyone was giving. We wanted to modify the way onboarding works. We wanted to modify the way the product is delivered, and all of that. And convincing a bank to do that, especially us coming from non-financial background, they didn't think we understood the risks of doing that, or we understood what does it mean to change this, and it took a lot of time. I think the first breakthrough came in when we were able to find this right banker, the large private sector banks, which he was a little younger. It was like 30, 35-ish compared to most other bankers, and he was a MBA grad and all of that. So he understood what we are trying to do, what a startup is, what we really want to build, and he gave us the first approval. So that was the biggest breakthrough for us.
yeah, and you also made a decision to go after the startup market, right? Which was sort of also not because there was CCAvenue and EBS, I think, who were doing pretty well, and they had, I would say, between the two of these companies, I believe almost 70 to 80% market share was just distributed among these guys. So your go-to market was essentially companies which were also figuring out their go-to market, right? So that helped. But was there any specific insight you derived from, say, during your YC days or even before that?
So we researched the payment market before we entered after that, and we saw that there was a significant need in the startup market. And first we tried to understand why there's nobody catering to it. And we realized that most of the payment companies are talking to enterprises only, or building the product for enterprise only, because enterprise controlled the majority of the market at that point. The largest payment companies were large travel companies, large government clients, large mutual fund houses. Those were the largest companies of that time, and everyone catered to them because that's where biggest payment volumes came in. what we thought is that this is the time where a lot of startups are coming in, and we fundamentally believe that a lot of these startups will come up and take over a lot of these traditional industries, and they'll become the industries of the future. Nobody is looking at them right now because they're small, but let's say if we onboard thousands of such startups, at least one or two of them will go up to become big, and we'll grow big with them. So that was the insight that we carried. It was a fundamental notion that we carried, and we invested a lot and heavily in that. Like onboarding every early stage startups, like on day one, we had 300 businesses sign up with us. We ramped up on the startup side very rapidly, and almost very quickly we became the de facto payments platform for startups. And that bet panned out because some of those startups that we onboarded that early on went on to become really large companies. And as they scaled up, we continued to be their payments provider. And as they scaled up, we also started to target larger players who were their peers now. So, for example, I remember we onboarded NextBigWhat, which was a very small company at that point. It was just Series A funded. A very small company. We onboarded them when they were very small, and as they became big, and today they process multi-million dollars of payments in a month, and all of that runs through Razorpay, right? So similarly, we've onboarded merchants like Rento Mojo. So again, very small at that point, Series A funded, went on to become Series B, Series C, and we continue to scale with them. So that bet panned out really well. I think, in a fundamental way, our business model was very similar to a VC, that you onboard thousands or 10,000s of startups on a monthly basis, and one or two or five of them will grow up to become big, and you grow big with them.
Yeah. I mean, you're also catching the wave at the right time, because if you look at it now, I mean, it's really difficult to break into that industry.
Definitely, and now we have a strong word of mouth going around.
And what was your spend in the early days? I mean, I remember people just talking about Razorpay, and it was largely word of mouth.
For a very long amount of time, it was word of mouth. Even today, we invest very low amount of money in marketing because we're not a B2C company. There's no point of us doing advertisements or banner ads or TV ads or things like that. A good chunk of our customers still come from referrals, or the ratio is about 30%, 30 to 40% today. And that is primarily because when people are starting a startup, generally they ask other peers, hey, I want to solve payments, how do I solve for it? Either they Google it up and they come in through search engine, or they ask their peers. And initially, our initial marketing strategy was very simple. I used to personally join these groups like Bangalore Startups, Pune Startups, and all of those. And I just post that, hey, we are building a payment gateway. Are you guys interested? Talk to me, and all of that. And that was an untapped market right now. None of the large players are looking at that market because nobody expected that big companies would come out of this. But I think that strategy worked really well for us. So initially we started asking people, and then we gave good service to a couple of customers. And over time, what happened is if anyone would post about payment gateway, everyone else would recommend Razorpay. So that became a really strong marketing strategy for us.
And what has been your metrics, success metric in the early days? Because typically processing payments is one, which is a function of how big your customer base is, right? Like we see, but from your own standpoint, that am I making a significant company, or we're just riding on some big numbers?
Yeah, so we had a couple of metrics. One is, of course, success rates. In a payment company, the reducing decline rates was a major selling point, and we ensured that we were at the top of it. The second was retention. That the companies that we onboard, it doesn't matter whether you onboard 100 companies or 1,000 companies, we don't lose the companies that we onboard. They stay with us. Payments is a large, strongly retentive channel. Like, people don't switch payment gateways unless you do really bad service. So we have to ensure that the retention rates are extremely high. Like, even one customer dropping out, we should know the reason, because it's not trivial to remove a payment gateway. So if the customer has taken that effort, definitely you have given something really, really worse. So our very, very strong metrics on that. And third was NPS, like how likely are customers to refer other customers, or are the customers referring other customers? And that was really, really high. It still continues to be extremely high, because the merchants who are on platform like the products and services as much that they refer to other guys. Hey, you want to do payments? Just go to Razorpay and forget about it.
And how has your ambition, and I mean the founding team's ambition, has evolved? And I think, early days it was more about Razorpay being a payment gateway, competing with CCAvenue, EBS, and several other providers. But now, like Rediff doesn't exist, I mean, pretty much most of the other payment gateways also don't exist, right? The market has also changed, but how has your ambition evolved?
Yeah, so firstly, like from day one, our ambition was not just to be a payments player. Our ambition was to be a large B2B fintech org. We wanted to build a lot of things for B2B business, because what we thought was there's a lot of companies trying to build on the consumer side. You have wallets, you have UPI apps, of course, you have general consumer apps on financial handling and all of that. But if you look at businesses, there are very few apps available in the country that solve for businesses. So when we started the company, our idea was we'll start with payments because that seems like an easy hook. It seems like something which is very under-penetrated and undersolved. But over time, we want to evolve. So we launched Razorpay 2.0 last year, which is where we decided to do more than payments. So we launched invoices, link-based payments, disbursements, bank transfer automation, and so many more things. Today, 60% of our businesses use more than one product today, which shows a strong retention. Early this year, we launched two large bets, which was Razorpay Capital and Razorpay X. Razorpay Capital is something where we help businesses get loans from our partner lenders, and Razorpay X is our neo banking platform where we help businesses manage their entire current account through Razorpay. So those are two major bets. But the idea with all of these is that how can we cover the entire financial ecosystem of disrupting businesses?
So for Razorpay Capital, you are essentially partnering with NBFCs.
Yeah. So we are partnering with NBFCs and banks, and it's a curated marketplace. So we work with specifically with some NBFCs or some banks where we can control the process. So that the idea is that how can we use just the transaction data to help businesses get a 3 to 6 months working capital loan.
Okay. And so it's almost a change from a payment model to payment ecosystem, right? So that also mandates that your entire company and the product teams, the engineering teams go through a certain pivot, right? So how have you guys are managing it or managed that? To what extent have you achieved it?
Yeah, so for us, we didn't view it as a pivot, and internally also we viewed it more as an evolution of what we did. Like we did X, and then we did Y as well, and then we did Z as well. But it doesn't mean we are not doing X anymore. So Google is a search company, but they launched Google Maps. It doesn't mean they are now a mapping company. They are more than a search company. They've launched 20 other things. So that's the way Razorpay is internally structured as well. The core payments team is still there, and payments is a core bread and butter of what we do, and that's not changing. We have a dedicated team now as a separate SBU, which handles Razorpay Capital. There's a dedicated team which now handles Razorpay X, and similarly we have a dedicated team to handle Razorpay 2.0. So they're all different teams, and the larger vision or OKR for all these is still aligned together into one single statement as we make is to empower the entire financial ecosystem for disruptors. That's one thing that aligns us all together. That's the one mission that all these teams are working towards.
Good that you mentioned OKR. I think there's a lot of conversation around OKR, and would love to know how have you guys implemented it. Because most of the companies are confused. I'm part of so many product management groups and many such groups where product managers, founders are, kind of figuring out how to use OKR. And then we get hold of a Google guy and, a lot of gyan, but it's also a cultural shift.
Yeah, definitely. So OKR as a concept sounds very simple on paper. That you will assign objective key results to from the top to bottom to everyone. It's easy to put it up on paper. It's very hard to execute because OKR is, the measurement part is simple, but the implementation part requires a cultural change. Like people need to become more metric driven, number driven. People need to align together towards a higher goal and all of that. And it's very easy to mess it up and set something on paper which doesn't work on execution. So I think we started the OKR journey last year, and I think the first year was, I would say, not that great because we set the OKRs, we set basic metrics, but I think somewhere the execution didn't go down. This year, I think we have executed it much better because we're able to flow it down even more deeper. Have we 100% achieved it? The answer would be no. I think we are somewhere between 60 to 70% there. It's still a journey. But I think OKR is a very beautiful way to align everyone in the org towards one single goal. So you set the top level OKR, then teams picks up their OKRs from that, then the sub teams pick up their OKRs from that, and then the individual picks up. The only challenge with OKRs is sometimes it gets lost in translation. So you start something at the top, and as you go down, you realize there's no owner at the bottom, and those things and gaps and misses, they look very small, but fundamentally when you look at the end of the year, you realize that, nobody owned this OKR. So that is the biggest challenge, and I don't think there's an easy answer to that. What it requires is that you need to understand that OKR is not an easy exercise, and you need to have a dedicated team ensuring that it's executed really well.
Yeah, you would have a coach just for that. So So talking about fintech, so Razorpay didn't really, rode the wallet wave, right? And even UPI, I believe, I mean, is that Razorpay took quite a while to enter the UPI space, you know. So now, what has been I mean, what's your take on fintech? What do you think is happening in the next few years? And even historically, I mean, UPI is probably at scale the first mobile-only product.
Yeah.
So first, let me correct you on that. We didn't ride the wallet or UPI wave on the consumer side. On the business side, we rode it. We were one of the first ones to ride it because we are not a consumer company. So we don't really intend to build a UPI app. But if you look at merchant acceptance of UPI, we were the first payment gateway to launch support for merchant UPI acceptance. And today, most of the large merchants exclusively accept UPI through us. So whether it's Zomato, whether it's Indigo Airlines, whether it's Airtel, whether it's IRCTC, whether it's BookMyShow, Oyo, all of them accept UPI through us. So our way of doing wallet or UPI was that, hey, we don't want to get in consumer, but it's still an instrument. The instrument may become important enough. So we aggregate all of that and ensure that our merchants don't have to tie up with each of them separately. So when with those wallets, we tied up with almost every large wallet in the country. And we ensure that our merchants are able to accept wallets because there were incentives, the consumers coming in. Same is the case with UPI today. We are one of the largest acquirers on UPI. A year back, 2% of our volumes were on UPI. Today, 20% of our volumes are run through UPI. So it has scaled up very rapidly. And I agree with you. Fundamentally, I think UPI is the instrument of the future because it's one of the only instruments built for mobile first. And for a mobile first country like India, I think UPI can change the way the entire financial ecosystem operates. And it is already doing that.
And what's your take on wallets? I mean, are they so obviously wallets are sort of dying down because of KYC, and I mean, I personally know a lot of people who have not updated KYC and they don't feel the need.
Yeah.
But more than that, is wallet fundamentally running out of use cases?
So there were use cases of wallets. The challenge that happens with wallets is they got stuck in the double whammy of KYC guideline and UPI. So first, if there was no KYC guideline, wallets might still have competed with UPI. If there was no UPI, wallets might still have been able to do KYC. But both of them put together became a reason for the death of wallets, as they call it. Because one fundamental reason for people to use wallets is really easy to onboard. That went away with KYC. The second reason was it's easier to transact. That went away with UPI because UPI allows you to use your already KYC bank account to be able to do transactions like a wallet. And what's the need of a wallet? That's the question people have. And I think that's something that almost all wallet companies have also realized. That's the reason almost all of them are moving towards UPI as well because there's no point of fighting that out. With KYC and with UPI both in place, the reason or use cases of a wallet are very, very minuscule.
Yep. And so as Razorpay, what are you seeing in the next 5 years? Next couple of years from a fintech point of view. I mean, UPI is definitely there, but you're also entering the lending space, and lending space, I mean, it's it. So I think founders are figuring out creative ways to lend, but the recovery is where the business model lies, and I guess that is something which is extremely challenging right now.
So first of all, on the large fintech story, I think I fundamentally believe that India is at a very early stages of fintech even today. If you look at like just payments market, the digital payments market is like hardly 2 or 3% of the GDP, and it's nowhere near to what it should be for an economy of our size. So I think whether it's $60 billion, $70 billion, whatever number you put it at, that number is going to go up by about 10x, and that's what even Nandan Nilekani report predicted that in next 3 to 5 years, this number should grow by 10x. So there's a lot of large markets waiting out there that's going to come online. So no matter how big or small or how much market share every company controls today, there's a significant larger market share that's going to come in. And I think that's where the biggest battle would be. The second is I think fintech as a domain has become pretty broad now. Like it's not just payments anymore. It's payments, it's lending, it's banking, neo-banking, which is what we are doing. It's wealth management, it's treasury, it's credit, so many different things. And I think each of them is growing really, really fast. And I think there's been a lot of large companies formed in every bucket, whether it's on the consumer side, payments companies, consumer side lending companies, or whether it's business side payments companies, business side lending company, business side invoicing companies. I think each of these domains if you look at market like US, there's a company in almost every, there's a $1 billion company in almost every vertical. I think that's going to be the case in India as well as it grows up. Coming to credit in particular, I think one of the reasons people are looking at credit is that there's a strong demand in the market. India has been a credit hungry market, and now we have a lot of alternate sources of data. People trying to figure out how can they deploy that alternate sources of data to make credit available to people who weren't ever part of it. Now, some of those models work, some of those don't, because it's still new, it is experimental phase, and some of those companies will fail which don't take the right approach. But overall, I think it's good for the ecosystem, because in a market like credit can really help the market grow really fast. And traditional view of loans has been that you take a loan and you get stuck in that. But at least in the business side, the view of loans is that if you can grow by X, you can take a loan, grow by 10X, and then pay 2X back. Right? And I think that is going to be the trend of the future. So we believe in lending a lot. You're right. Lending is not just about giving money. Everyone wants money. It is about recovering my money back. And I think the companies that focus strongly on that side of the problem will then emerge as winners.
Yeah, and that's where I guess a lot of algorithms will come into picture, even whom you're lending to, because these are not part of a CIBIL TG.
Yeah, that's why everyone has a lot of alternate sources of data. We are using payments data, somebody's using social data, and so many different things. Some of those models will turn out right, that yes, this indicator makes sense. Some of those will turn out false, and some of the companies might fail or might pivot. But in the end, as I said, it's great for the ecosystem.
Yeah. And as an entrepreneur, what are some of the key learnings you've had over the last few years? You started with a market which thankfully grew, and then you're moving from just being a transactional company to playing the bigger role, right? So, what has been your decision-making model, in terms of how has it evolved?
And so one thing is, as a founder, you always have a lot of choices. And so while it is important to know what you are going to do, it is also extremely important to know what you are not going to do. And that's something that a lot of times people miss out on, and they get carried away by the market. Oh, this is the new trend I need to catch. Oh, AI is the new big thing. Everyone needs to do AI. Or blockchain is the new big thing. Everyone needs to do that. You need to know what you are going to do and what you are not going to do, and focus on that strongly. Like, for example, we took an early call that we are not going to be a consumer company. We are going to be a business company. So whether the trend of wallets came in, or whether the trend of UPI came in, or whether it's consumer credit that came in, we stepped back and said, we're going to do this, but only for businesses. We're going to do this, but only for businesses. And that ensured that we don't get caught in the rat race of trying to do everything and competing with everyone. And I think that fundamentally ensured that the core fundamentals of the business were very strong. We are a B2B org. We are very strong on understanding merchants. We are very strong on understanding businesses. And I think we can say with proud that we are the best B2B financial org in the country. If we were distracted ourselves and trying to do B2C, B2B, and everything else together, I don't think we would have been able to make that statement. So having a strong focus and knowing what you are going to do and knowing what you're not going to do, I think that's really critical for an entrepreneur.
Yeah, and I'm sure you must have had this thing that, let's do a couple of more things. So, I mean, how has the team kind of, controlled that urge to even launch new things, right? So,
yeah, no, that happens, right? Especially when, for example, I remember during the wallet wave, almost every 6 months, somebody from the team will come to me and say, hey, why are we not launching a wallet?
I mean, and importantly, your engineering team, your product management team will come back, because they're also asked these questions in the community. That,
everyone will asking that, and it's not just internal teams, even externally, investors to merchants to partners. Everyone asks, like, everyone is doing this. Why are you guys not? That's why it's really important to stick to your fundamentals, right? And that's something you have to decide early on, what you're going to do and what you're not going to do. Ensure you stick to it. Doesn't mean that you're just stubborn about it. Sometimes markets change, and sometimes you have to move to something else. But for us, we realized that the value that we brought in what we were doing is significantly high, and just doing something for the sake of a trend is not meaningful. I could never figure out what is the value add that we will bring in by doing into consumer side. There are 10,000 consumer companies in the country. Everyone is doing everything, and it's not like I could find that, okay, maybe there's one or two things we could do better than somebody else, but this is not a significant delta, and these companies are doing good. So why not we focus on what we do best? And one thing that we realize is that because B2B doesn't get as much limelight as the consumer domain, there was a lot of dearth of companies, and there was a myriad of problems that we could solve. And I think if we just kept building and solving those problems, we could build a large org. And even recent US IPOs have also proven that B2B companies are fundamentally stronger. You've seen Zoom, you've seen Slack, you've seen so many IPOs going out. So, and all of these companies are the same ones which didn't go into consumer side, which stuck to their principles. And today you can see their S1 filings. They're beautiful to read at.
Yeah, I think in India, the whole respect for B2B has now begun.
Yeah.
But B2C obviously gets a lot of not just limelight but valuation as well, right? So even talking about how you have managed investor relationships, what are some of the key learnings? Because I mean, I was just recently reading that you guys are ensuring the board seat and all, because we have seen some of the examples where founders are struggling even though they have created great businesses, but if they're not in control of the business, it's going to become tough.
Yeah. I think on the investor side, what is more important is that you need to work with an investor that you feel comfortable working with. It should not be just to be about money or just about valuation. If you do that, then investors will also treat you the same way. And you get investors just for the sake of getting a higher valuation, then don't expect to be treated differently. Right? What we decided whenever we decided to fundraise, we talked to multiple investors. We figured out, do they believe in us? Do they believe in our vision, or they're just investing so that because they have a particular direction in their head for us? So it is very important, especially in early stages, that the investors are investing in you because they believe in your vision as a founder. Right. They believe in your story or your direction as a founder, and it's just not, they are not just investing because the market seems exciting, or just because I want to invest in payments, that's why I want to invest in Razorpay. It should be more like, I like Razorpay founders and I like payments domain, that's why I want to invest in Razorpay. And when that is the case, then all of these things like having control on all of those things are very easy to sort, because the investor is also investing in you as a founder. So he's willing to let go of certain controls. He's willing to give you the front rank seat, because he's not investing just because payments is exciting. He's investing because what you are doing in payments is exciting, and then he'll be willing to give you that trust. So for us, even in this round, we recently closed, we got it from Rabbit, Sequoia. Both of these are large organizations. Both of these have invested a lot in fintech. Rabbit is, of course, one of the world's largest global fintech investors. Sequoia is one of the largest Indian investors. So I think the marriage of both of them coming together for us, we felt that will be the right combination for us to take Razorpay to the next level.
And are you guys personally doing angel rounds or
Yeah, me and Shashank have done a couple of small deals here and there. Mostly, if we find something interesting, we definitely try to put something there. I don't think we are a very large angel investor, but we have done a couple of deals here and there. So if something seems exciting, I think more than money, the value me and Shashank would traditionally bring is more around our journey and what we have learned and what advice we can give from there.
What do you think is the most underrated, element of an entrepreneur in India? Because angel in India, we all celebrate funding. We all, so the whole media is all about funding and different stories and all of that. But the darker side is totally different. Founders go through a lot of pain / their own journeys. So what do you think is one element which you would personally like to kind of bring forth?
I think going through failures is a part of every entrepreneur's journey. And failure doesn't mean just a company shutting down. Failure could be in everything. You tried a strategy, it didn't work, you failed, and you had to try something else. I think as a market, we're still not mature enough. We are comfortable talking about failure as much. So founders would come in and give you all the stories of what went well, what went great, how everything went right. But very few founders will find it, and it's just mostly because of the environment, they will not find it comfortable telling what went wrong. And I think that is as important, if not more, than what went right. I think those are the stories that people don't get. When I personally meet founders and I'm telling them about my story, I always ensure to highlight the things that didn't go right, and then how we felt at that moment, how we felt that almost everything is coming crashing down and nothing's going to go anywhere, but how we work towards to ensure that we come out the top through some other strategy. I think perseverance is a very key trait of a founder, and not giving up when things deep dark doesn't mean that you never give up, but not giving up too early.
Yeah. And I mean, talking about Razorpay itself, so what has been some of those moments where you felt that, okay, things are not working out, and even I guess you guys started in Jaipur,
Yeah.
right? So from Jaipur to even taking those decisions, right? That you have to shift the entire base.
Yeah.
Uh,
So I think we had a lot of moments where we felt we're not going to go anywhere. So the reason we started in Jaipur is it's my parents' house. So when we both left our job to start Razorpay, we both moved to my parents' house and we started building there. I think those were the toughest times for us because we had left a very high-paying job. Shashank was in Microsoft. He was left a 1 crore plus package. His package had made headlines in his local newspapers and everything. So leaving all of that, coming back to a place like Jaipur and started to build a company, I think it was extremely tough. And while we were building the companies, you have a lot of pressure from everyone around you. I mean, parents were supportive, but then you had your relatives, your friends, and everyone doing extremely well. And all of them saying, "Hey, you left your job in US, you came back to India, you're working out of Jaipur, building something like, what's up?" and it's extremely frustrating at times to handle all of that pressure. Parallel to that, as I said, that was the time when we started approaching bankers and spent 3 to 6 months, and we got constant rejections. Like I would meet a banker one day, get rejected, meet next one the other day, get rejected, meet another one the other day, ask him if he can connect me to someone else. Okay, his bank can't do, can he connect me to other banks? And all of that. And a lot of times we are too shameless about it. Even if they say no, approach them again, try to get connected to a higher guy and something like that. I think those were the toughest times for Razorpay. I remember we got into YC in October. We were in January to March, we were in YC. And while we were in YC, we were still not able to launch because we couldn't get the final bank approval. So every week we would go back to YC partners and YC partners to say, "Hey, where are you?" "Oh, we are waiting for a bank approval." After 3 times, we felt embarrassed saying it again. So those are the times when you felt really like, have you got into the right domain? Should we have taken something simpler where we would just build the product and launch it rather than taking something where we are stuck on somebody else's approval to decide our fate? So those were some really tough times. I think what helped us through that was that we strongly believed in the problem that we wanted to solve. And what we kept thinking through that is that while it is hard for us, it will be hard for anyone else who tries to get in as well. So once we solve this hurdle, once we move on to the next step, and once we are able to launch, it will not be easy for anyone else to come in. And that's why even today you see there are not like thousands of payment companies that are launched every day, because this challenge is the same for everyone who tries to come in. And while we have overcome that hurdle, that creates a barrier of entry for the guys. So as long as you keep doing good, you don't have to worry about 1,000 companies coming with inordinate amount of funding and just dumping capital in this domain, because it's not really easy to launch into this domain.
Awesome. So any final notes on suggestions to founders / product guys, or if you want to share anything else?
Yeah, I think I've covered most of it. But for founders in particular, I think India is at a very exciting phase of its journey right now. And anyone who's building products or technology for India, I think is going to have a large market to cater to in the next 3 to 5 years. Whether it's fintech or it's other domain. In fintech in particular, I can see that it's just exploding everywhere. Every domain is exploding. And if you just have your fundamentals right, if you focus on the right things, I think everyone is up for a large opportunity in the future.
Cool. All right. Thanks, Harshil, for coming over, and wishing you all the best.
Thank you.
Cool.